The reality is many portfolios are cookie cutter, many portfolios are over diversified, and as I asked earlier, what's the largest holding in your portfolio? What is the percentage you own of that position in your portfolio? And what is the impact that could have on your overall ability to accomplish your financial goals?
Welcome to It's All About Clarity, the go-to podcast for bringing clarity to your financial journey. Join Mark Pearson and the Nepsis team as they share insights to portfolio management, tax strategy, and more. Whether you're interested in investing, retiring, giving, saving, advising, or tax planning, here it's all about clarity.
Welcome to another edition of It's All About Clarity podcast. I am Mark Pearson, the founder, Chief Investment Officer, and CEO of Nepsis, Inc. You can look us up at nepsisinc.com, nepsisinc.com. Would love to have you take a look at our website and our content, and appreciate you taking the time to tune into my podcast today. I'm going solo again on this one, and as you may know if you listened to the last podcast, I did a very general overview of the concept of modern portfolio theory and some of the disadvantages of that. I talked about the power of volatility, and that volatility creates the opportunity to take advantage of buying great businesses on sale. I discussed how the stock market is the greatest tool ever created to bring buyers and sellers of great businesses together, and how the stock market really was created for everyday investors to take advantage of investing in capitalism. And as I discussed, and we'll discuss more today, the power of volatility and why volatility is great, at the end of the day, ultimately, I believe, in accomplishing your investment and financial planning goals, the advantage, if you will, of having the ability to know what companies you own in your portfolio, and if desired, to know why you own those companies, gives you an advantage in helping you accomplish your financial goals. I really believe that the financial services industry continues to cookie cutter itself, continues to put people in a box. Everybody's financial situation is different. Everyone has ebbs and flows of things happening in their lives, whether it is having children, having grandchildren, losing a job, retiring, health, starting a business, whatever the financial situation is, everyone's situation is different. And a portfolio is impacted differently for every investor that's out there. And so investing your money in a way which I believe is cookie cutter in nature, or putting you in a box, so to speak, puts you at a disadvantage, not at an advantage. So what puts you at an advantage in helping you accomplish your financial goals and your investment goals? I believe simply it is clarity. It is the ability to log into your account, to see the companies you own, and more importantly, to see what percentage of those companies you own in your overall portfolio, and the potential impact those percentages can have in helping you accomplish your goals. Today, I want to talk specifically about the Nepsis buy discipline, sell discipline. What is our investment philosophy? What is our investment strategy? We're going to cover that, obviously, in general here in this short period of time we're together, but I believe that ultimately, the more clarity you have about what's happening with your money, the more apt you are to accomplish your investment and financial goals. Obviously, there's no guarantees because there are variables out there that are beyond your control. But the greater clarity you can have in what is specifically happening with your money, I believe the more apt you are to accomplish your goals. As I asked in the last podcast, let me ask the question again in case you didn't see it. Do you know what companies you own in your portfolio? Do you know what your largest investment is? And I don't mean your largest ETF or your largest mutual fund. I mean, what company is your largest holding in your portfolio? And if you don't know it, you should. If you do know it, the next question is, what percentage of your overall portfolio is that company? Can that company impact your ability to accomplish your long-term goals? I often say that no one position should break the long-term portfolio performance of your portfolio or your financial goals. The ability to have clarity in knowing your largest holding and the ability, if desired, to know why it's your largest holding becomes an important aspect of accomplishing your financial goals. So let's talk about buy discipline and sell discipline. Here at Nepsis, we have 4 sell disciplines. Sell discipline number 1, we're going to sell a position if we want a tax loss harvest. What does tax loss harvesting mean? That means you sell a position at a loss to offset gains. You can go back, purchase that company again after 30 days and own that company long term. But if you have a loss, you can offset gains. I realize while many investors focus primarily on what the rate of return is they got in their portfolio at the end of each year, the reality is that capital gains play a major role in the overall rate of return of your portfolio on an annual basis. We are long-term investors in businesses. Our goal is to sell as little as possible. We don't want to pay capital gains, especially if the long-term fundamentals of a business haven't changed. So sell discipline number 1, tax loss harvesting. Sell discipline number 2, the long-term fundamentals of the businesses owned or the business owned has changed. No questions asked. We sell at a loss or we sell at a gain. If the long-term fundamentals of the business we own and the reasons why we own that business have changed, we are going to sell that business, period. Sell discipline number 3. We sell a position in the portfolio, whether it's at a gain or a loss, to take advantage of buying another business that has gone on sale, another business that we believe longer term is a better investment for us to own. We're going to sell that position and move into that stronger position. And sell discipline number 4. You never get in trouble for taking some profit off the table. While we don't want to maximize capital gains, we also understand from a fiduciary standpoint that taking some profit off the table can be a prudent decision in the long-term aspect of investing in a portfolio. Additionally, it provides the ability to raise cash to take advantage of buying other companies that we may see are on sale. Many times I'm asked, how can you take advantage of volatility when you're 100% invested? Well, that's easy. When you own 20 to 30 companies in your portfolio, you always have a place to go to sell, to raise cash, to take advantage of buying something on sale. This is one of the advantages of knowing what you own and why you own it. So those are our 4 sell disciplines. So buy discipline. What is it that gets me excited about buying? Well, first and foremost, I hate to sound like a broken record, but it is volatility. As I sit here recording this podcast today, the S&P 500, I think in 2024, is up over 10% year to date. It has gone straight up really since October of last year. And many companies are up 20, 30, 40, 50, 60%. Some are even up more than that. But at the end of the day, it is time in an investment, not timing in investment. We are not in the business of trying to, quote unquote, time the markets or time buying into a company. We believe that you invest in great businesses. Prices go up and down all the time, but you continually invest into that company as a function in your buy discipline of the overall asset allocation. Other aspects of our buy discipline, GARP. We believe in GARP. We don't believe in growth and value. We believe in growth at a reasonable price. GARP. Many people would say NVIDIA is not a good value. Well, it's year to date up over 120%. When were you going to make that decision? Hindsight's always 20/20, of course, right? But the reality is nobody has a crystal ball, and nobody knows what a stock is going to do day after day, month after month, or year after year. You have to make your investment decision based on the long-term fundamentals of that business you're investing in, just like a business owner does in investing in their own business or businesses. Here at Nepsis, we are a diversified financial services company. We own different aspects in the financial services business. We continually invest in our business. I know where the largest amount of our revenue comes from. I know where the least amount of our revenue comes from. This should be the same fundamental aspect of looking at your investment portfolio. Now, today, many of you watching this podcast don't have the time, don't have the expertise to understand the fundamentals of the businesses you're invested in. Frankly, that's why a lot of investors work with financial advisors that cookie cut their portfolio. But this is why we have clients here at Nepsis. They hire us to invest their hard-earned money into great businesses over time. The reality is you work hard for your money, or you worked hard for your money, and having clarity in understanding how you invest that money, where you invest it, and the impact it has on your overall financial and investment goals is paramount, period. Other aspects of the buy discipline, as I mentioned many times before in previous podcasts, dividends play a critical role in investment portfolios. Depending on the studies you read, 40 to 60% of total stock market returns historically have come from owning dividends. Not nearly as much as it's been in the last 20 years, as the overall investment thesis over the last 20 years has been investing in quote-unquote growth. High valuation, high growth, less dividend. Why? Because interest rates were so low. However, I believe as interest rates begin to normalize, we come back to the historical average rate of return on the 10-year and the average historical inflation rate of 3 to 4%. Dividends are going to play a major piece in overall portfolio performance. We also believe in investing in our buy discipline in small, mid, and large cap companies. We're agnostic to what country that company may be in. We're agnostic to the size of that company. We want to invest in great businesses, period, long term. And I believe that it is clearly a function of time in a business, not timing a business. Now, some of you watching this podcast may say, well, you know what? I'm 75, I'm 80, I'm 90. I don't have time for my investments. Well, this is where it becomes important in working with a Nepsis advisor to understand how much money you need to live on, where your money is going to go, where your tax implications are. Are you going to run out of money? Are you not going to run out of money? Can you afford to handle volatility? Can you not afford to handle the volatility? How much money are you taking out each month? Where is the best place to take that money out each month while you're alive? The reality is that a well asset allocated portfolio is the foundation, no matter what your age, to the philosophy, the strategy of the buy discipline and the sell discipline and the overall asset allocation of your portfolio. So, as part of our buy discipline, as part of our investment philosophy and strategy, not only are we agnostic to the size of the company, we're agnostic to where that company is located. We're agnostic to whether it is considered a growth stock or a value stock. We are more concerned with the overall asset allocation and the quality of the businesses that are owned in our portfolio. The reality is many portfolios are cookie cutter, many portfolios are over diversified, and as I asked earlier, what's the largest holding in your portfolio? What is the percentage you own of that position in your portfolio? And what is the impact that could have on your overall ability to accomplish your financial goals? If you don't know that, you may want to consider investing with clarity. You may want to consider a conversation with a Nepsis advisor. In closing, obviously, it is impossible for me to cover all aspects of investing with clarity. It is impossible in one podcast to talk about it's all about clarity and all the advantages and all of the disadvantages of an asset allocated portfolio, of volatility, of tax mitigation, of buy disciplines, of sell disciplines. But one thing is a fundamental truth. The ability to know what you own, why you own it, what impact it has on your overall portfolio can only enhance your ability to invest with clarity. And that's why we always say it is all about clarity. Thanks for joining me once again today. I hope you found some useful information to use here today. And remember, it is all about clarity.